Ladies and gentlemen, boys and girls, welcome back to Finance Tube. I'm your friend and finance guru Vishal Thakkar, back again with interesting topic of discussion. And today's topic of discussion is tools for financial analysis. It's been long time that I have started a new series, and in this series I'm going to talk about each of the tools and techniques in detail as to how you can conduct financial statement analysis. So friends, what are the three tools that I'm going to talk about today? Tool number one, comparative financial statements. Yes, we can compare the financial statements of, let's say, a company like Hindustan Lever with, let's say, a company like Procter & Gamble, because they use the same rules for making the financial statements. You put their numbers side by side on an Excel sheet and you will be able to compare that which products Hindustan Lever is doing good, which products Procter & Gamble is doing good, and what are the margins, how is the net worth looking like, what is the working capital of these companies, so on and so forth. So that is one of the easiest and the simplest tool of financial analysis. Going on to tool number two, common size financial statements. So when we talk about common size financial statements, what we do is we convert the sales number as 100 and every other number is expressed as a percentage of sales. When we do it for balance sheet, we take total of balance sheet as 100 and every line item of the balance sheet is expressed as a percentage of total. Why do we do this? This helps us to compare the peers or compare the year-on-year performance of a company by eliminating the magnitude bias. So, if a company is having a profit of 2,000 on a sale of 10,000 crores and another company is having a profit of 5,000 on a sale of 20,000 crores, we kind of have to convert them into percentages to find out that which company is doing better. So common size helps you to do vertical analysis by comparing a company's performance for over a number of years, putting them in same Excel sheet and converting it into percentages. And you can also do peer comparison for the same year or multiple years as the case may be. The last and the most important tool of financial statement analysis that I'm going to talk about, and which will make us to do at least 5 more videos on this series, is ratio analysis. Yes, ladies and gentlemen, ratio analysis helps us to do a deep dive and give understanding of company's financial position in 4 aspects. What are the 4 aspects that I'm talking about? Liquidity, solvency, efficiency and profitability. Yes, these are the 4 aspects. I'm going to repeat: liquidity, solvency, profitability and efficiency. So you have to stay tuned and keep on watching this space to understand that how I unfold each of the measures, and close to about total 25 key ratios of business which are classified into these 4 categories, and do a deep dive of financial statement analysis. So friends, stay tuned to my channel, keep watching this space, and yes, if you haven't subscribed to my channel, subscribe our channel today. Finance Tube.